And 650 billion US dollars, the largest SDR allocation in the history of IMF, and a shot in the arm for the global economy at a time of unprecedented crisis. This has been the news for about a week now. But what are the conditions attached to this special drawing right? Nigeria has $3.35 billion, which it will get on the 23rd of August. Will it affect the country's debt stock? What about its foreign exchange liquidity? We have Ari Eisen, IMF resident representative for Nigeria, to shed more light on this. Good morning, Mr. Eisen. Good to have you on the show.
Morning. Good morning, and thank you for the invitation to come.
You're welcome. So your document shows that the fund is shared in proportion to existing quotas of the countries. How is this quota determined?
So the quota system of the IMF, which is revised from time to time, reflects the participation in the global GDP of every specific country. So in the case of Nigeria, it has a quota equivalent to 2.45 billion SDRs, which is the equivalent depending on the exchange rate, but the SDR is a basket of 5 currencies. Every day is changing, but it's about, as you said earlier, $3.35 billion, which is going to be very helpful to Nigeria. We are in an unprecedented crisis and require unprecedented efforts from the global community, and the International Monetary Fund is in the forefront in boosting the liquidity of our member countries, and it's an unprecedented amount. The last time was after the global financial crisis, $250 billion. Now it's $650 billion to help our countries face the challenges of COVID-19 pandemic.
All right, Mr. Eisen, looking at Nigeria's quota now, are there conditions attached? For instance, countries that use their SDRs will incur net charges on the difference between their cumulative SDR allocations and their SDR holdings. Can you shed more light on this?
That's a very good question. First of all, we are saying that countries, the 190 member countries, including Nigeria, are sovereign to make the decisions on how to use those SDRs. The way it works is that the IMF, the Board of Governors, approved on August the 2nd the disbursement, which should take place on August 23rd. And these SDRs will go directly to the Central Bank of Nigeria, and they represent about 10% of the stock of international reserves of the Central Bank at the moment. And they will be at the disposal of the Central Bank, those SDRs, as of August 23rd. So the basic condition is that after it reaches the Central Bank, then the country will decide what use to make out of all those resources. What we are saying, and we are calling to partners, not only the governments of the various member countries, but civil society, development partners, international and domestic partners, to work with us to ensure that those funds are used wisely in an effective way to the benefit of the country and to the benefit of the Nigerian people. This is mostly what we are insisting, typically following very adequate and good transparency rules and accountability and responsibility.
Okay, so you're calling on civil society groups and all that. So you are interested in that the fund is used effectively, but how do you ensure, for instance, do you ask to say what percentage is used for what, or do you just wait to get news maybe from civil society groups and other individuals or groups who can share the information with you?
The government is sovereign to decide on the final use, but we work with partners in discussions with the government to be able to see how the channeling of the funds will be made. The funds are not earmarked. It's really going to the central bank to boost liquidity. This is a very precious resource. It's a reserve asset, typically held by central banks, SDRs. They cannot be used for transactions. They will have to be converted to other currencies if that is the decision, and they will have to be on land depending on discussions in between government and the central bank. So all these, the sovereign will decide the best use of those funds. But we have trust with the government of Nigeria and with Nigeria as a country that the best use can be ensured, and we want to support the transparent and good use of the resources, as we have been doing, by the way, since our latest disbursement of funds during the last year with the RFI, to stimulate and encourage transparency and responsibility in the use of the resources from the International Monetary Fund. And by the way, this is not only to Nigeria, it's to the 190 countries of our membership.
All right, Mr. Eisen, what are the implications of this statement here? It said members that receive SDRs, either under a voluntary transaction or by designation, have to provide foreign exchange in exchange, effectively replacing one reserve asset by another. Can you explain this, please?
Yes. So the injection of those SDRs is a long-term liability of the country vis-à-vis the IMF. But it doesn't increase the debt burden of the country. If the central bank decides to hold those SDRs, it will be an asset to the central bank, it will be a long-term liability. The interest rate, which is 0.05% today on those SDRs, will be a revenue to the central bank, but also an expense of the central bank. So it basically washes out. If the SDRs are converted to other currencies, or if it's actually on lent to the treasury, then the long-term liability remains, and the interest rate on the SDRs continues to hold, meaning that the central bank will still need to service that long-term liability, long-term debt. But of course, it will depend on the arrangement. If those funds are used, how the central bank will be repaid on those funds to be able to continue servicing that long-term liability. So this is more or less what's going to happen. If the central bank decides to switch the SDRs, which is a reserve asset, to other currencies and still hold those currencies that it's holding in treasury bonds, for example, or other government bonds in the various currencies, we will earn revenue, we will earn interest, and the SDRs that are long liability will need to be serviced as well and pay, as I said, 0.05% interest, which is almost zero.
Okay, so we know that the IMF is also exploring other options to help poorer and more vulnerable countries in their recovery efforts. Could you let us in on some of these other efforts?
Absolutely. It's very important to know that out of the $650 billion to be disbursed, 42% goes to developing nations, low-income countries, and emerging economies. 58% go to wealthier countries. So from those advanced economies, those who have a strong balance of payments, strong buffers, and high stock of international reserves, there is an effort, ongoing effort, and the managing director, Kristalina Georgieva, has said time and again, is in touch with other member countries that have those strong positions to see if resources can be channeled to increase the amount that would go to developing nations. And there are many ways of doing that. One of the ways is using our existing trusts and facilities that could receive additional funding. One of them is the Poverty Reduction Growth Trust, PRGT, that is used to finance programs that the IMF has with various developing countries.
All right, but can SDRs be traded between member countries?
Yes, the way it happens is that SDRs can be converted by other countries who accept in their central banks voluntarily the SDR, and then other central banks can give other currencies to the central bank that wants to trade. And that's how precisely this is done, on a voluntary basis. And the IMF can also be a facilitator in between central banks to exchange those SDRs for other currencies.
Okay, so what happens when a country, a member country, sells their SDR? What happens? Do you pay some kind of interest?
What happens when it sells its SDR?
Yeah. That's when you trade your SDR with another member state.
Well,
will it incur some kind of interest or something?
No, as I said, the SDRs will go to the other country. In exchange, the other country will give currencies, dollars, pounds, yuans, yens.
Okay.
So the central bank would have lost the SDR asset and would have exchanged for different assets in its international reserves.
Okay. All right.
The other country who received the SDRs will then be entitled to the interest rate paid on that SDRs.
Right.
And the central bank who gave up on the SDRs will have the long-term liability received for having received that, and will have to service the other country that is the final recipient of the SDRs.
Okay. All right. So I mean, let's look at.
Yeah.
No, go ahead.
Yeah, you need just a second. You need to look into the balance sheets and who is holding what, and where the obligations are vis-a-vis the fund and vis-a-vis each other. But the idea is that there is a voluntary way that SDRs can be exchanged by other central banks to other currencies. I hope that is clear.
Yeah,
yes. So I mean, away from the SDR now, let's get IMF's perspective with the threat of the Delta variant now in the country, in the world, globally now. Does the IMF see a shift in global growth forecasts, you know, that has been already put in place by now, and now we see this Delta variant of COVID-19, you know, causing some restrictions, reintroduction of some restriction and reduction in demand in some parts of the world? Do you see a change in the global growth forecasts?
The global forecast for growth has been recently revised upwards, in fact, for 2022 and maintained for 2021. I think it's too early to judge whether this global forecast for growth needs to be revised. We are still monitoring very closely the situation and how governments are reacting to the Delta variant, and if restrictions are going to be increased. So far, vaccination is the main focus of the global efforts on the COVID-19 pandemic. We've been at the forefront, together with our development partners worldwide, in trying to facilitate the use of surplus of vaccines in some countries to be redirected to other countries. And I was very glad to see some donations of vaccines even to Nigeria recently from the United States, some Moderna vaccines that came to the country. So this needs to continue. More surplus in other countries should be channeled to countries who need vaccines, and to increase vaccination globally. This is a global issue. Yeah. And it requires a global solution.
Efforts,
we want to stimulate, encourage, and participate very strong collaboration among our member countries to get this pandemic defeated to the benefit of the global economy, to the health of our global citizens. And we are at the forefront with a lot of pride helping our member countries in this fight. And the global injection, as you said very well, is a shot in the arm. Is to give liquidity, is to boost the capability of our countries to finance, for example, vaccines if they need additional vaccines. We want our member countries to be able to do that.
All right, Mr. Eisen, thank you so much for sharing. We can see that the IMF is really in the forefront of spreading the vaccination program and all that. Mr. Ari Eisen is the IMF resident representative for Nigeria, and he joined us on the program to speak mostly about the SDR that will be effective from the 23rd of August. Thank you so much, and enjoy the rest of your day.
Thank you very much for having me.
So we'll take a break now. When we come back, AFEX Commodities Market Update is next. Join us then.